We are grateful to our partners for today's session, which includes the Treasury, DD-CAP, Emirates NBD, Gatehouse Bank, the Global Ethical Finance Initiative, Islamic Development Bank, London Stock Exchange Group, and the UN for their ongoing support. Today's session will look at Islamic finance and sustainability through a banking and investment lens. Going green, commercial opportunity or operational headache? I'm delighted that we can be joined today by experts from our task force on green and sustainable sukuk. And my colleague Sultan Choudhry will kick off the session with an update on our live global Islamic finance and SDGs retail survey. After Sultan, we'll have a panel discussion with Rafe Haneef of CIMB Group in Malaysia, Charles Haresnape of Gatehouse Bank in the UK, and Christian Gueckel of SEDCO Capital in Saudi Arabia. A couple of points of housekeeping as we kick off today's session. For those of you who are alive and kicking, please feel free to share this discussion on social media using the handle at UK_IFC and the hashtags IFSDG22 and UNGA77. The questions you can find at the bottom of your screen, so please submit any questions you may have via the Q&A function, and should time permit, we'll look to take a number of these questions from the audience. I would now like to kick off the proceedings by inviting Sultan to the virtual stage. Sultan is a board advisor, Sultan Choudhry OBE is a board advisor to the UKIFC and also the chairman of the National Zakat Foundation. Sultan, over to you.
Assalamu alaikum, everyone. Greetings. Thank you, Omar, for the introduction, and it's a pleasure to start the topic today. Now, as Omar mentioned about the Islamic Finance Task Force on SDGs, there are a number of initiatives that form that task force. The one that I'm going to talk to you about today is the education and awareness subgroup. And it's a very important area that we've prioritized because there are a number of stakeholders in the Islamic finance industry, from shareholders, boards, staff, and consumers, where I think we feel, and our kind of initial hypothesis is that education and awareness of the UN Sustainable Development Goals is not as great as it could be. And maybe that is what's hampering the take-up of the SDGs within Islamic finance institutions. And so I'm going to quickly share some slides of where we are with an initiative within the education and awareness screen. So just bear with me 1 second while I bring that live. Share. Right, so hopefully you can see the title page. So one of the key initiatives that the Education and Awareness Group have defined and have initiated is a global retail survey. So of the stakeholders I mentioned, we felt that we would tackle consumers first because they are ultimately the commercial drivers for Islamic finance institutions, particularly in retail. And if consumer demand was apparent, then that would trigger, a mind shift in boards and staff and management. So that's kind of one of the reasons. We've got a number of reasons for doing that. So as I mentioned, it was seen as a priority. It was also to take a bottom-up approach, as well as influencing boards and CEOs and central banks, which some of the other work streams are focused on. We wanted to also approach the issue of SDGs and Islamic finance from the bottom up through consumers, and hopefully highlight the importance of the sustainability goals for our customers, for those of us who work in retail Islamic finance. And if we could show some evidence for consumer support, well, then actually that made the case a lot stronger. And even if there was low awareness, we wanted a baseline where Islamic finance consumers were. in relation to sustainable development goals? I mean, do they understand even the terminology, or actually is it the actual goals themselves that they understand without the framework? So there's a number of interesting things that we wanted to understand. And then finally, there's an opportunity coming from the survey, because the survey would produce information both for the institution, both for the country that it was also run in, and also across the globe, to see if there were trends, commonalities, differences. And it would hopefully provide information for those Islamic finance institutions to take up the opportunity and essentially build products that appealed to the particular nuances of their consumer base, and ultimately build consumer loyalty and show commercial benefits. Ultimately, we feel you've got to join the two up to really bring SDGs and Islamic finance together. So that's essentially why we did the survey. Some of the specific goals of the survey, which are kind of reflected in the why. But we wanted the current state of awareness, and it's a benchmark to kind of build on going forward. We may run the survey periodically to see if it's improving from the position that we were in today. We wanted to establish whether that demand from consumers would impact their consumption. So it's a bit more specific than what I mentioned before. So it's saying, actually, if you've got a green element, for example, in your product, does it make you want to consume that product more? So very much a consumer behavior question. And also, which of the sustainable development goals resonates most with the consumers of Islamic finance? Is it climate, or is it more social type goals, poverty? And finally, it's not finally, but do consumers want to find out more about SDGs? And maybe the survey actually also has a benefit as of and of itself, that actually it raises awareness itself, the survey. And do you want to find out more, and what channels do you want to find out more about the sustainable development goals? And of course, as I mentioned, what are the variations between institutions and regions? So some of the organizations, and these are some of the organizations that have taken part. There are general consumers as well, and there's a few other institutions in the mix, but these are the prominent institutions. Clearly, UKIFC ourselves. The video's just cut off 1 second. Clearly, UKIFC themselves. Jay's Bank of Nigeria, we've had fantastic response in Nigeria, phenomenal response to the survey there. Gatehouse Bank in the UK, CIMB Malaysia, HBL in Pakistan, and Islamic Bank Australia, a new Islamic bank. So we've got 4 continents there, by my count. So if there's anybody on the video or who's watching this seminar that would like to get involved, to participate, if they represent an Islamic finance institution, please contact myself or anybody at UKIFC, and we can get your institution involved in this valuable survey. Now, it's been running for about a month or so. What are the indicators thus far? So so I'm going to try and move a slide along. For some reason, it's not moving. Just 1 second. Right, here we are. So we've had nearly 1,800 responses so far, and that's pretty much what we'd expected at this stage. But it's not bad. It's statistically valid, and we're hoping to get a lot more by the end of the survey period. Early trends then, and it's quite interesting. So 95% of the respondents do think it's important that finance products fit in with their values and ethics. I suspect, for Islamic finance, we knew that, but actually this is just as reinforced, what we knew about the value-led consumer. 74% are aware of the UN Sustainable Development Goals, which is actually, I think, thus far, as I say, this is live. It's midway through the survey. I think it's quite interesting. So the terminology isn't alien, which is really important. And in the survey, we simplify it a little bit because there's a lot of buckets in the SDGs. We've grouped them. But interestingly, and maybe it's reflective of the audience and the countries that have the survey's gone to, but reducing poverty and hunger, health and well-being, and clean water and sanitation are the most important areas for most people who've responded. And we'll see, once we've done the regional variations, I think we'll get a bit more nuanced information as to which regions have which goals as a priority. And I think because this has been a little bit of an ongoing survey, and people have been impacted, for example, by flooding and whatnot. I think that this may be an evolving area. And most importantly, 87% of respondents are willing to spend more on banking products that are aligned to sustainable development goals. So that's, I think that shows that that people are willing to pay a premium. I think we know that from non-financial products to a degree. People pay more for organic food and environmentally conscious coffee, for example, but actually they're willing to do so for banking products, which is interesting. And then finally, social media is the source they want to find out about SDGs and Islamic finance more. And in particular, Facebook, actually, it's not on the slide, but Facebook seems to be the social media outlet of choice. So these are the trends thus far. These are early trends. We'll know more as the survey ends, and there'll be more analysis and more specific answers to the questions. But hopefully this sets a bit of context and background to the debate that we're just about to have. So I'll hand over at this point to Omar to continue the session.
Thank you very much, Sultan, for that update. I think that's not only is it really important for the Islamic finance industry, but also doing a global awareness survey on the understanding of the SDGs, and it is in itself extremely useful for the United Nations, DP, UNDP, and the other elements of the UN. So thank you very much for that, Sultan. So moving on to the panel discussion, I'd like to invite our panelists to join us. So we have with us Rafe Haneef, the Chief Executive Officer of CIMB Group in the Group Transactions Banking Division. We have Charles Haresnape, CEO of Gatehouse Bank from London, and Christian Gueckel, Chief Risk Officer from SEDCO Capital in Saudi Arabia. Welcome, gentlemen, to today's panel discussion. So this is going to be very free-flowing, very frank, and very much to the point. The topic of today's discussion is going green, commercial opportunity or operational headache. Is this really our time? Yesterday there was a fantastic discussion with Richard chaired on outperformance or double trouble, but today we're going to look really very much at the operational challenge and the consumer retail demand, which builds off the presentation from Sultan as to what he's finding. So maybe if I can first invite maybe Charles to share some thoughts on what are you guys seeing in terms of the actual consumer retail demand, and what kind of challenges is that created for the business in terms of the cost of business for that matter, and indeed the broader dynamics in modern society?
Oh yeah, thanks Omar, and good morning to everybody. To Sultan's point, really, we are seeing a reflection of that survey in the practical day-to-day interaction with our customers. So we are, primarily a retail-focused bank, and mainly producing green home finance products and also saver products aimed at sustainability. So again, we've also recently seen a Forbes survey which said that 90% of customers would pay up to 10% more for products if it suited their beliefs and their ethical stance. And that's up from 34% in the previous year. So we're seeing, independently, as well as through the IFC's valuable survey, customers increasingly looking for sustainability as part of their product decisioning choice and prepared to pay a little bit more to obtain that. We've seen it through, obviously we were one of the founder members of the United Nations Principles for Responsible Banking 2019. We've been a really big effort for a relatively small bank to demonstrate our commitment to ethical nature products and sustainability. through becoming carbon neutral as a bank in 2021. And the key is working with our customers to make sure that as we transition through to net zero over time, that we actually work with them. So for example, launching our Woodland Saver account, which is obviously a savings account, multiple savings products, where we plant trees for customers when they open accounts with us. At no cost to the customer, clearly, and the carbon offset that's obtainable from the trees goes to the customer's credit. The bank doesn't take any credit for planting those trees itself. In a relatively small amount of time, we planted 20,000 trees within the UK, which is a serious carbon offset. Customers love that. And when we survey those customers who've taken deposit accounts on our Woodland Saver, why did they actually choose us in terms of, they can go anywhere in the UK for savings accounts. 85% of those respondents said that the fact we planted trees as part of the product offering was a significant part of their decisioning process. So we believe that proves that customers want to work with their financial institution to make the world a better place. So I think the key thing now for us certainly is focusing on very practical targets that we can set working with our customers. So one of them, for example, is we want to make products available to an increasingly younger generation, even in these times of challenging affordability, but also bring education to customers and the UK population in particular, in our case, why sustainable products work and why they're available, and actually making it clear to people if they want to have a sustainable approach, they should work with financial institutions as well as other retailers. So I think, Omar, what we've seen is real demand, increasing demand for products that focus on ethical status and sustainability. And the next stage for us is to develop further our green home finance, so the Islamic equivalent of a mortgage, where we can help customers improve, for example, their homes, the sustainability, the green content of the home output to make the world less carbon dangerous. And that's the next stage for us. But the key thing, I think, to finish really is it's working with our customers, because we found they've got an absolute genuine interest in working with financial institutions to better the world, genuinely.
So Rafi, sometimes they say ethics are the luxury of the rich. How are you finding it in a different demographic in Malaysia? Is what Charles has seen from his customers also playing out in Malaysia?
Yeah. Assalamu alaikum and good day. And thank you, Omar, for having me on this panel. If you look at what we saw in the beginning, when we started on this sustainability journey back in 2016, 17, we felt the pressure coming from our shareholders, particularly the institutional investors, who were more conscious about the impact that their investment companies are making, both on the environment and social front. So the pressure came from the investors towards all the investee companies, and CIMB was one of those investee companies. And we had then basically catered for their requirements and started to look at the impact that we are creating. So as I mentioned to you, the sustainability journey requires the banks to look at reducing negative impact that we directly and indirectly cause, and at the same time improve the positive impact. So we then looked at, as you pointed out, what are the operational issues that you face in doing this? One is you need to be conscious of the impact that you're creating. So that requires us to identify the negative impacts, because we felt before we can go on a journey to create positive impact, we got to first reduce our negative impact. Because if you continue with the negative impact, then the overall impact, the net impact would be marginal. So we started by identifying what we call the negative impacts, and then came up with targets that by 2030, these are the negative impacts that we will reduce from a baseline that we have created. And we also looked at the positive impacts. We engaged with various stakeholders to ensure that we are able to get their feedback in terms of the type of positive impact that we need to create across the environment and social fronts. So these were the two pillars we looked at. how do we consciously reduce our negative impact, and how do we promote the positive impacts, and use the businesses that we have. We have three, what we call key businesses in CIMB Group. One is the wholesale banking. So as you pointed out, the wholesale banking group, which has a lot of listed companies, they were pressured by the institutional investors to pivot towards sustainable businesses. And we had the smaller businesses, the SMEs, and then we have the consumers. The demand or pressure from the consumer segment and the SME segment was not that prominent at the beginning of the journey. However, once we started, rolling towards promoting sustainability across the wholesale banking segment, we saw more demand coming up from the SME segment and now on the consumer segment, as highlighted by the survey earlier. So what we are seeing is these small changes that we have made at the wholesale banking side in terms of issuing, for example, green sukuk for the Republic of Indonesia. CIMB issued Malaysian sukuk, Malaysian sustainability sukuk for government of Malaysia. All these small steps that we took had now led to what we call larger, more critical changes that could lead to a tipping point where there would be a massive shift towards sustainable banking and sustainable finance in the years to come. So what started as more of an institutional push is now seen to be a shift towards bottoms-up demand towards sustainable products and solutions for the banking sector.
Just to clarify, unpack a bit there, just want to clarify one thing, Rafe. So when you said the institutional pressure that started your journey at the bank through the wholesale division, was that local institutions or was that international institutions?
It's both local. We have large pension funds who own shares in CIMB, and we also have foreign shareholders, the pension funds from Europe particularly. In all our investor meetings, these were the few top questions that came up. And that really caused us to think. And that was a time when we were coming up with our 5-year strategy plan. And we were very conscious of this profit for purpose role that banks need to play, what today is called the conscious capitalism, where profit needs to be linked to purpose. And we felt that, if we don't create positive impacts to the stakeholders beyond our shareholders, then we are not doing justice to the community that we operate in. So that literally, dovetailed into that strategy for sustainability across all our business lines. So the demand has been quite encouraging. We just announced that in 2021, we had an ambitious target of facilitating about 30 billion ringgit, about $8 billion worth of financial intermediation across our markets. And we are happy to note that we have actually completed that target mid this year, at least 2 years ahead of plan. And we have just doubled the target to 60 billion, about $12 billion, $15 billion, sorry.
Excellent. No, fantastic. So shareholder pressure brings us well to Christian as an asset owner and asset manager, for that matter, both across based out of the Gulf. What's your views on the commercial opportunity or the operational headache? How are SEDCO Capital seeing the market?
Yeah, thank you, Omar. Hello, everyone. First of all, thank you very much for inviting me to this panel. I'd like to share, as Omar has said, the perspective of an investment manager based in Saudi Arabia, but investing globally. And in terms of the commercial opportunity, I think it's for us, there are definitely important commercial aspects and economic aspects. But it's not just that. I think we can broadly subdivide our investor groups into two. One that is, say, interested in the investment beliefs and preferences, being Sharia compliant and following responsible investment approaches. And for our investors, we have come up with a strategy that accommodates for these investment beliefs and preferences, that we refer to as prudent ethical investments, PEI, which is the integration of Sharia compliant and socially responsible investments. So that is one aspect. And then the other one is an investor group, broadly speaking, that is open to this investment approach, but also has commercial or economic targets. Being, I would say, somewhat return driven. If we go back to that first investor group interested in the investment beliefs and preferences, for us, I mean, we've come from the Sharia compliant background, and in that sense, we've been Sharia compliant across all our product offering, and since inception of the firm in 2014, we became the first Sharia compliant signatory of the UNPRI based in Saudi Arabia, and also the first Sharia compliant signatory of UNPRI in 2014. So the concept is basically, or the thinking is that Islamic finance and responsible investments are both ethical in nature. Both principles align well in their aim to improve the living conditions and the well-being of society, establish social equality, prevent injustice in trade relations. Besides these ethical considerations of Islamic finance, I mean, there are positive externalities of responsible investments that are a motivation, of course, and there are positive side effects of that investment approach. So we can align that with UN Sustainable Development Goals, like the positive impact, for example, the measurement of carbon emissions. For many investors, as I said, the choice is driven by the preferences and investment beliefs. In that sense, the commercial and economic rationale, on the other hand, is that our investment approach, PI, can deliver better risk-adjusted returns. I mean, it's very well documented in academic research that ESG integration adds to returns, adds value for investors. For example, firms that do well on ESG considerations have or tend to have better reputation, competitive advantages. They tend to reduce risk. So it's ultimately reflected in the returns and risks. So, and then on the other hand, we see advantages, for example, from the Islamic finance angle that we bring in into prudent ethical investing. There's cash and leverage constraints, for example, that tend to improve balance sheet qualities and thus, for example, lower default risks. One aspect, I mean, in regards to the commercial and economic rationale is that the exclusions, the so-called sin sectors, such as tobacco, alcohol, weapons exclusions, they tend to result in underperformance. So that is also well documented in academic research from 15, 20 years ago. Probably that effect was less significant recently because more investors are actually following those exclusions and are under allocating to those sectors. We've also done a research paper on this approach, the characteristics of prudent ethical investment portfolios, so combining Islamic finance and ESG integration. And we have shown that PEI, prudent ethical investing, can outperform standalone Islamic portfolios and also standalone SRI portfolios. So, and that's due to a bias in quality and growth factors, which has helped our performance.
Christian,
yeah.
Can I ask you then? So clearly you've put the case forward there for Islamic investing principles and then PEI, your additional kind of criteria around ESG. But when we look at the signatories to the PRI amongst global Islamic asset managers and the OIC, it's less than 2%. of the global signatories, which are in the thousands to the PRI. Why is that?
Yeah, I mean, it's difficult to say. I mean, and it's to some extent surprising, because for us, I mean, the two approaches align extremely well, as I mentioned at the beginning. But nevertheless, we have seen more and more signatories from the region signing up with UNPRI, and also at UNPRI, there's a push to bring in more institutions from the Middle East region into as signatories. So,
Okay.
I mean, there's definitely good rationale to follow that approach.
No, absolutely. Based on what you're saying, it makes a lot of sense. And maybe I can open that out to Rafe and Charles as we just continue this conversation on the commercial opportunity, then we'll move on to the operational headache. But is Islamic finance really capturing the commercial opportunity of market share, addressable market share, by going to this mainstream ESG demand? Charles?
Well, certainly, I mean, I can only speak for the retail sector really, but yeah, I think the Islamic finance community, which is relatively small in the UK, let's be honest, of the total availability of finance, I think it's doing, it's more than punching above its weight, to be quite honest, and people like yourselves and your organisation supporting it is fantastic. The big way that we're going to see more sustainable finance is if the really big banks, particularly in the UK, come through and support these initiatives. So, for example, we're seeing an increasing evidence of insurance companies in the UK offering green, investment opportunities within people's portfolio of pension pots, but it's still relatively small. And I don't get the sense, certainly in the UK, that the whole green finance agenda is at the top of the promotion of financial products. It's in the mix, it's there, it's good that it's there, but the day-to-day products generally, the historical products still dominate the market. So I think, certainly within the UK, I'm sure it's the same elsewhere, I think we need to continue to lobby the fact that, green products and sustainable branding in finance should be the norm, not the kind of bit that's trying to muscle into the mainstream finance products. So I still think there's some way to go. And I'm hoping that some of the really big institutions, whether pension funds, whether big global banks, actually take a very proactive initiative. What we don't want to say, I'm not accusing anybody of this, it is a greenwashing approach where it's the right thing to say, but the actions are not quite as forceful. So I think there's more we can do to work with the bigger institutions to encourage them to take more of a lead on the topic.
But Charles, all of them have sustainability in their first sentences of their company.
Well, you would, wouldn't you?
Purpose-driven banks and so on.
Yeah.
So are you saying that that's not reflecting in the product range sufficiently? Is that?
I think when I look around the home finance market in the UK, there are a few green-focused home finance, mortgages in the UK. But actually, it feels to me still a very secondary market. It's not the main push. And I think part of it is the continued education of the consumer that these products are available. They're more mainstream than they're not kind of, small things on top. I mean, a good example, a comparable would be, as Sultan mentioned, the organic products, in supermarkets. They were small things on the edge of aisles. Now it's a much bigger section of the supermarket because people are genuinely interested. But there's more education. And I think you've seen supermarkets really go out of their way to advertise the fact they support these products. I think we need to do more of that in the financial sector.
Good point. And Rafe, is that what you're seeing as well in Malaysia? Is because Islamic banking is much more, considerably more market share, I would say, it's captured in Malaysia compared to, of course, the UK. Is the Islamic banking sector able to really position itself to capture that commercial opportunity on its ESG credentials rather than its Sharia compliance? We've lost Rafe. It's frozen on us. Maybe the question was too challenging potentially, Rafe. Well, hopefully we'll see you back shortly. Right, let's continue. The team will scurry around, no doubt, to find Rafe in the ether somewhere. But moving on then.
Happy to share our perspective on that topic, Omar, if I can. I mean, from what we are noticing is in the investment space and investment products is that the push for responsible investment is really on the environmental side. So the E aspect of ESG integration has a strong emphasis to most institutions. And we also see that, for example, for our Luxembourg platform of funds, where we have to consider sustainable finance directive and have to align with that, have to classify our products. And when we work with investment managers, I mean, the strong effort that everyone in the asset management industry is focusing is really climate change, environmental in general. And I mean, as Islamic finance institutions, I mean, we're probably more focused on the social aspect of ESG, I mean, given the background. So it requires much more education and, for example, in regards to classification, SFDR, but also on our side as Islamic finance institution, I mean, we have to do more on the environmental side, which historically we haven't done, but I mean, a couple of years ago, we have integrated climate change considerations in our investment process. We have products on that and have done a great push to enhance our investment approach. And I think I mean, from what we are seeing is there is this emphasizes, and it's somewhat kind of I think it's not the desirable stage even for environmental aspects. So, for example, there is a pricing of the factor carbon emissions in equity markets, and it's very backward looking, focusing, for example, on what what companies have emitted in the past, but and I mean, there's very sector focused, for example. So I mean, certain sectors like industrials, materials, energy have much higher emissions, and so portfolios are getting biased to less emitting sectors like business services, consulting, or so. So I think the market has still to go and to develop. It requires much more education, even with large financial institutions.
Thank you, Christian. Rafe, where did we lose you? And welcome back, first of all.
Thank you so much. I had some connection issues.
No problem. So we were talking. Well, Rafe, come in from the audience. Rafe will have to mute you for. Can hear the echo. The question, Rafe, is in Malaysia case, how do Islamic banks cope with so many variables with BBI, SDG, ESG, and now green financing vis-a-vis sustainable finance and the recent social finance? Too many jargons to play with, and will this confuse further the potential issuer and obligor? And premised on that, what will be the direction of Islamic finance industry moving forward? So a real alphabet acronym spaghetti going on in the ESG world.
So if you look at Islamic banks in the beginning, they were quite indifferent towards this UNFI, the UNPRB and SDGs, because there was a general sort of understanding that given we are already Sharia compliant, we are already in compliance because we have a negative list. So we are not really part of this sort of negative impact issue. But with the greater awareness, I think the industry realized that the negative list that we have been holding on for 50 years is too narrow. and we have to broaden it. So we have now broadened it to include environment and social considerations. And that requires help in terms of defining what we mean by social impacts and environmental impacts. And that requires being part of a larger organization like UNEP-FI. So that was one of the principal reasons why we joined UNEP-FI as part of our capacity building, so that we can at least identify the core issues that we have to address, and then the tools that we need to measure and report them. And then we looked at the UNPRB. If you look at the principles of UNPRB, Islamic banks have already been practicing, in a way, the principles of UNPRB. For example, clearly identifying the purpose of Islamic finance and having a mechanism to measure them, and having independence, for example, in terms of validation. We have a Sharia committee that have validated all the Sharia contracts and Sharia solutions that we provide. So the UNPRB basically reinforces what Islamic banking industry was already doing. And the last part is certain SDGs were still lagging behind what Islamic banking has already been doing in advance. For example, we don't finance alcohol industry. And we don't, for example, finance gambling, gaming, and other what we call socially destructive industries. So these are the areas where I think the SDGs need to be beefed up, and Islamic banking can play a role in terms of enhancing the SDG itself. So I find that what started as an indifference has now warmed up to being, look, we need to play a role in developing the sustainability finance or sustainable finance industry. And I think Islamic banking eventually would take a major role in terms of defining what SDGs and what we call the sustainable finance measurements and targets should be.
So Rafi, on that, so now, do you feel that Islamic finance as an industry has a voice sufficient voice, I should say, to help inform the design and development of these global frameworks? And yes, there is a multitude of things like the PRB and the PRI Christian sign up to, and indeed the SDGs. Is Islamic finance listened to? Is it being engaged with sufficiently? Rafi, you still with us?
Yeah, I mean, the engagement has always been open. I don't think any of these organizations, whether it's UNEP-FI or the sub-chapter, which is the UNPRB, we have to play a role. Islamic banking industry has to reach out to those institutions and then play a role in terms of defining our own perspective and provide the guidance in terms of how do we reshape some of the SDGs so that it is not only aligned with our values, but it goes out to promote greater positive impact to the society. I think in that sense, there is no what we call constraints in terms of accessing these institutions. Unfortunately, some of our institutions are not really taking the leadership in terms of engaging with them and broadening the ambit to make sure they are more in line with Sharia principles.
The challenge remains there. Moving then on to the operational headache. Charles, so you're quite brave as a bank, as you mentioned, for a relatively smaller bank to sign up to the PRB. What did you find in terms of the operational challenge of actually implementing this? So we've seen the consumer demand, you've seen that and reflected on that, but at a real practical level, is this worth it, or is it just too much headache?
No, actually, from a product perspective, it's not too difficult to put a focus on the green and the ethical agenda. I mean, obviously we are, as others, we are fully Sharia compliant bank in the UK, so we start from the point of we take an ethical stance on everything we do financially. So that's a great starting point. The products, are good proofs of that. But I think the challenge is actually, there is a challenge to be recognised of being, for example, within the United Nations, umbrella for this, because it does take resource to track what you're doing. We have to work very hard on developing targets to get to our net zero in due course. And so there's a lot of engagement with the board, with the stakeholders, the shareholders. But I think it becomes, so you have to invest in people. We have invested in staff, experts to help us on that journey to track what we are doing so we can report back to our customers. We have a sustainability report published on our website every year, which is a fairly lengthy document. That takes time, takes resource, but we believe that's worth it, because we need for ourselves to be able to prove that we are making a difference rather than just saying we're making a difference. And that takes effort, to be quite honest. It's very easy to say it, it's very hard to prove these things. But the other key thing, the reason why we found it a little bit maybe more straightforward than it could have been, is getting our staff as part of the process. If you engage your internal staff and they see that it's important, and we take a lot of time to explain to staff why we're doing this and what it's about, they then start to think in terms of what we do must be consistent with this policy, right? So we would actually be rightly caught out by our own staff if we didn't follow through on some of these things. So I think it's quite correct to involve shareholders and take on board their views. That's critical, obviously. The board is fundamentally important because, if for no other reason than regulatory-wise, the board owns these policies, right? The whole green agenda, the culture, they all fit together, and the board own that and have to track it. But our staff are the most important. And I think, staff want to come and work for you increasingly if you stand for these things and can prove it. It's actually, right now in this a crisis, certainly in the UK, of trying to get staff. There's a shortage of staff in the UK. And actually people are more interested in working for an organisation, whether it's Sharia or not Sharia, if it stands for something in this area and it can prove it. That's the key point. So I don't see, in summary, I don't see massive, operational constraints at all, but it takes work. And the key thing is to keep focusing on it, not just do it for a couple of months and let it drift away. It's the relentless focus that's important.
Yeah, that's very insightful. Thanks for that, Charles. And Christian, for yourselves signing up to the PRI back then, was it short-term pain for long-term gain, or did you see the benefits of that? Or how did you navigate the operational challenges of that, I should say?
Yeah, Omar, there are definitely substantial operational challenges, and it's not short-term kind of work or thinking, because the responsible investment framework is so dynamic and there are so many changes. So you have to constantly stay on top. You have to continue to work and enhance your approach. I mean, a lot has changed if you think back. For example, when we started as a UNPRI signatory in 2014, I mean, there was less emphasis on climate change and environment, probably more on governance considerations. And so it's really a resource game. I mean, you see the very large asset manager putting a lot of resources to kind of essentially put hurdles to entry. And I think now it's more and more difficult to enter. So I think we have a head start at that. For example, taking the many frameworks that you have mentioned earlier, like I don't know, TCFD, Net Zero Asset Manager Initiative, SASB Alliance, and so on. I mean, there's so many frameworks that asset manager, in particular the very large ones, participate, and that all creates hurdles to entry. So for us as a smaller asset manager, we have to focus and I mean, the operational challenges, for example, with UNPRI, you have an annual reporting framework that takes time. So it's not just annual maintenance. I mean, it's data gathering, reporting, reviewing, auditing. And I mean, then when we go back initially to our efforts, I mean, we had to create the responsible investment processes. We have to train our staff, and I mean, obviously the training and enhancement is one of the key aspects that we do on a regular basis. Then you also have, for us as an asset manager, the Sustainable Finance Directive in the EU. I mean, we run fund platforms in Luxembourg, so the classification under SFDR is something that takes time. I mean, there are more and more requirements rolled out over time. So then, I mean, say 2 years or 3 years ago, we enhanced our investment process for climate change considerations. Yeah, I mean, you see a lot of kind of ongoing things that happen, but it's essential. I mean, the debate in the industry is very much about greenwashing risk, and I think probably as a Sharia compliant institution, we have a good advantage here with greenwashing risk, because Sharia is at the core. I mean, that has been the core of the firm, has always been audited, has been actively reviewed, is well documented, and then we put the ESG integration, we put climate change on top, and I mean, that's very, I would say, slightly easier than probably other, let's say, conventional financial institutions who deal with that topic.
Thank you very much, Christian. Well, look, we're rapidly coming to the close of the session. So the final word, each of you, what's your conclusion then? Commercial opportunity or operational headache? You've talked about the challenges across that spectrum and where Islamic finance is in that journey. What would you say? Where do you see Islamic finance and the broader green and ESG journey 10 years from now? Welcome your quick concluding remarks, or one bullet point comment. What's your vision? Where do you see this going forward? And Charles, if I can kick off with you.
10 years time, it's no longer initiative, it's the norm, and it's all completely integrated with a financial institution's internal culture. It's just the norm. It's the right thing to do. It doesn't need any principles. It's just the norm. That's what I would like to see.
Excellent. Business as usual.
Correct.
Excellent. Rafi?
Sorry, I got disconnected again. If you look at the future for Islamic finance industry, is not to lose out on the great opportunity that could be commercialized from the sustainability angle. If you look at each country, whether it is UAE or Malaysia or Indonesia, at a country level, we've all committed to what we call NDCs, nationally determined contributions under the Paris Agreement. And each of these countries have got certain targets to meet in terms of reducing the global their emissions by 30 or 40 or 50%. This will require a significant shift in the way the economy is being shaped. So if Islamic banks do not be in the mainstream in terms of engaging with these opportunities, they will lose out on new emerging economic opportunities, whether it is solar parks or renewables or hydros or green agriculture and so on. So that's on the opportunity side. The second part is in terms of risk management. If Islamic banks are not familiar with the risks inherent through all these various calamities, climate risks, then they would have what we call both physical risk and transition risk exposure on their books, which they need to address. And all this requires a clear direction in terms of how Islamic banks would pivot towards sustainable finance in the years to come.
Great. Thank you very much, Rafi. Thank you very much, Rafi. Clear opportunity and the risk perspective there. And Christian, yourself.
Yeah, so I agree with Charles' point. I mean, it's becoming mandatory. I mean, if you are not following responsible investment approaches, you have to justify very well in the future. I think the Sharia aspect will become part of a broader portfolio of, say, responsible investment approaches, and I mean, of course, will remain important and core but it will be part of a kind of investment processes driven by say climate change, social considerations, and multiple investment strategies. Like I would expect impact investing becomes more important, active ownership. So how you engage with your investments, how you actively progress towards improvement, and probably we will also see some shakeout and kind of adjustments to frameworks. So for example, with greenwashing, I would say institutions are becoming more cautious. That's an advantage for us. I think we are well positioned as financial or Islamic financial institutions, and probably also say the whole climate change considerations may be adjusted or somewhat considering what's currently ongoing with the energy crisis in Europe, and seeing, for example, more and more consideration or more and more use of say energies like coal that we thought we had overcome. So I think that may be a challenge as well. So it will be part of a broader framework, but there could be some disruption and shakeout.
Great. Thank you very much, Christian. Well, thank you to all of our esteemed panelists. They really are pioneers in the ESG and Islamic finance space. The work Charles, your team have done at Gatehouse Bank in the UK has really led the way with the green mortgages, the green saver accounts. Rafe, the work CIMB have done in actually setting up the PRB as those original kind of founding group of banks has been phenomenal, and a great example of how the Islamic team has led the whole bank into the ESG and sustainability journey. So kudos to yourselves and Christian. Of course, the PEI stuff that SEDCO started nearly a decade ago, and as you said, that first signatory to the PRI as an Islamic investment manager asset manager is really, really commendable. So thank you to all of you for sharing your insights, much appreciated. And thank you also to all the team behind the scenes, Chris and Sam. Thank you for putting everything together. Just a reminder to everyone watching, we have our final part of our three-part series in an hour and a half, 90 minutes time. That will kick off with the United Nations Special Envoy Dr. Al Mariki, and the amazing Dr. Amjad Saqib, who many of you might know through Ahuwat, who has been nominated for a Nobel Peace Prize for his work on Islamic microfinance. So that will kick off in 90 minutes. And finally, a couple of updates that you would have seen in the chat box. Chris and the team have kindly been putting in some links to some of the reports and the thought leadership outputs from the Global Islamic Finance and UN SDGs Task Force. Do please check that out. And we are delighted to be partnering with our sister entity, the Global Ethical Finance Initiative, in the Unlocking Islamic Finance workstream, which is one of 4 workstreams that will be part of the launch of the Path to COP28, which will be taking place, Christian, in your region, in the GCC in Dubai. That campaign will kick off on the 24th of October in Dubai. And if you Google pathtocop28.com, you'll find out more information. Thank you once again to all of you for listening, and all of our panelists for sharing their insights. Thank you, and Assalamu alaikum. The webinar will now close.